with all of these small banks, the tech banks, community banks going down, and all the money pinned at the central bank or at the big banks, the CBDC rollout becomes very simple. You just have 4 banks, they're really all the same. And now you don't have any choice. And the alternative to that, though, is if people buy Bitcoin, that is literally the exit from the system. It is something that they cannot control. They cannot edit the entries on that ledger. That's the whole point. It's this bulletproof, decentralized ledger. And the 21 million number, they can't corrupt it and they can't censor it.
If you didn't know, the Fed is releasing their FedNow CBDC in July. Opt out of the system now before total control comes. Bitcoin gives you a way to do that. It is something the government cannot control. They cannot print more of it. They cannot censor it. If you're skeptical of Bitcoin, you should be doing more research right now because CBDCs are coming very, very soon. What's happening, crypto family? Welcome back to the channel. We'll be checking out a recent interview from Balaji in today's video. If you don't know who he is the co-founder of Council, former CTO of Coinbase, and some of the things he talks about in this video are eye-opening. So I suggest you guys watch to the end. But he talks about what he thinks what's going to happen next with all these banks, Bitcoin, CBDCs, and how all 3 of these tie together. So you want to make sure to check out what he has to say here. Let's go ahead and play the video.
Just as in 2008, the bankers lied. We forgot how much they had lied to us because, that was obviously a huge thing in 2000. They basically almost bankrupted the world economy, lying to us, lying to themselves, some combination of greed, incompetence, malice, or whatever, blowing up the whole world economy, right? This time, the central bankers, the banks, and the bank regulators have lied to all dollar holders and depositors. It's not your typical fractional reserve situation. There is enough in the banks on a mark-to-market basis to cover withdrawals. I call it Uncle Sam Bankman-Fried. Okay, that's actually, if you want one line, just like Sam Bankman-Fried, he owed people, let's say, 1,000 Bitcoin, right? But and he had some balance sheet that said his assets added up to 1,000 Bitcoin, and he fooled himself, or he fooled the rest of the company, or whatever it was, into thinking he actually had that. But he was actually like gambling and all this other stuff. And he maybe marked it at what he had when he bought it, but he didn't have it when people came. And when people actually came, he couldn't liquidate those assets to actually get the Bitcoin that they wanted because he had gone and gambled it, right? And then, of course, the entire exchange collapsed, right? This is basically what has happened, not just at FTX, but at all the banks. All the banks bought long-dated U.S. treasuries as well as other bonds in 2021. They binged on bonds, as I'll show you in a second, okay? They binged on bonds. Basically, in response to the Fed's guidance, here's the article. Do you see this? Banks are binging on bonds, but not because they want to. Do you see this? Smoking Gun article, right, from 2021 shows enormous increase in buying of all these bonds and less commercial loans. They all got centralized on one guy, Uncle Sam, right? Buy bonds, even if it means skimpy profits. So they have to invest in one of the least lucrative assets around, government debt, guaranteed to produce skimpy profits, right? And actually what happened was basically that all the printed money from 2020 sloshed around the economy, and it cut off the normal flow of normal loans because customers had, high levels of cash in hands. They normally didn't take out loans. So it broke the banking model. So all they did is they put all this enormous amounts of cash into bonds. And when the yield on the treasury note rose to 1.75%, banks hungry for higher returns rushed to buy them. So this was like 1.75% was like a high return in 2021, August 2021, right? And moreover, and that spike didn't last, right? So, by the way, this is all like banking gobbledygook to many people, right? But part of the thing about this, I'll explain in the simplest terms I can, right? First, what you should do, right? What you should do is buy Bitcoin, get your coins off exchanges, and go to a crypto-friendly jurisdiction. Inside the US, that'll be like Florida or Texas or something like that. Outside the US, which might actually be better, honestly, as I'll get to, would be like El Salvador actually, or UAE, or like Singapore and so on. Like Western Europe, not so much. Basically the closer it is to Blue America in a network sense, Japan is far away from Blue America, but it's very connected to Blue America in the sense of having lots of US dollar deposits. The closer it is to Blue America in a network sense, the more it banked on the Fed and the worse off it is. Okay. And just to give you a sense of what actually happened, first I'll show you some graphs, okay? Because graphs get the point across. This is a graph of like how much Treasury is making. Look at that, just down and to the right, okay? This is a graph of how, meaning they're losing money, okay? Treasury, the central bank is losing money. It doesn't look like normal times, okay? This is a graph of unrealized losses, okay? And this is really like the core bomb that's blowing up this whole thing. If you ask for your cash, there'll be an Uncle Sam Bankman-Fried situation where they don't have the dollars on hand to make up for it. But that's what happened with Silicon Valley Bank. That's what happened with other banks. Credit Suisse has now just admitted it was a bank run that got them. In the digital age, bank runs are very fast. Once people hear that something's possibly insolvent, they all just go and pull their money out, right? And so the whole concept of, oh, they'll only ask for this much at this time, that's no longer the case. You could have everybody do an outflow at the same time if it goes viral. Back when the political class was just denying things, stop worrying about inflation, right? Inflation fear lurks, even as officials say not to worry. Powell downplays inflation risk as Yellen foreshadows future spending, right? And then, whoop, like this, okay? So, again, people watching this don't need to know how interest rates work, but essentially what they did was they faked out everybody. Everybody who's making long-term plans. They said inflation was a conspiracy theory. It's not real. You buy 10-year bonds. That denial continued through 2021. Then the rates just got hiked super fast in 1 year, higher than 10 years. Everybody who was a bondholder got destroyed, including SVB, by many others, all by the Fed. This is what happened, right? Everybody who trusted the Fed, everybody who made essentially a long-term bet in 2021 on the full faith and credit of the U.S. government, on the financial health, 10-year bond, supposed to be a stable country. It's not supposed to go wee, up and down like this, right? They got destroyed, absolutely destroyed. Basically, in a sense, if you still thought America was the same country in mid-2021 and you still kept doing what you were doing, then you weren't doing the right thing. Clearly, the country had just permanently changed, right? Even if, like what had happened before in 2020 with the crazy riots and so forth, all of that now became the government. And so that kind of went now, it's like swallowing the poison, right? And so everybody, the form may have been the same, but the substance was now totally different, right? And, so I said, like inflation is a case where yesterday's conspiracy theory became today's conventional wisdom. The issue is all kinds of contracts a lot of folks claiming that SVB was a victim of the industry. They weren't that big and they weren't a shock. The thing is, this is just either delusional or it's wrong or it's whatever. But, as I mentioned over here, even Janet Yellen has admitted that the high interest rate environment, basically that caused people to lose market value. I mean, imagine if Sam Bankman-Fried, he had these assets, he owed you 1,000 Bitcoin. People came back and he only had 400 Bitcoin. And he had assets that he thought were worth 600 Bitcoin. He couldn't sell those to get 600 Bitcoin. But then suddenly in comes the government and issues him stuff over here, new Bitcoins, and he could give them back. That won't work for Bitcoin because you can't print Bitcoin. The 21 million limit is actually, it's such a simple but important hard constraint on the entire system, right? Whereas with the Fed, they can swoop in behind the scenes and start printing dollars such that these guys can make good on their obligations, right? And that is what has happened, where there's essentially like both domestic and international bailouts. Now, the simple version of what I think happens, and there could be a lot of twists and turns, is it's really going to be one of two things. First, there's all kinds of chaotic printing and bank runs and so on in the weeks to come as worried depositors check on their funds. And the big branch point is whether they wire it to big banks or where they turn into Bitcoin. And that determines basically whether freedom lives, as funny as that sounds, okay? Because if everybody wires to big banks, and they think, oh my God, the Fed saved us, the big banks saved us, and all the small banks and all the tech banks and so on die. Well, the Fed now, CBDC, which they chose, by the way, to announce even in the middle of this crisis, okay? They announced it on March 15th. It's going to come out in July, okay? Then all the money is trapped at all the big banks. And then in July, you only have like 4 banks left or whatever it is. The CBDC is rolled out and too big to fail becomes like too big to escape. You literally can't spend your money without government approval on anything. Oh, you want to buy that? Beep, beep. Nope, that guy's bad. That person, you can have very fine grained pulling of every single transaction anybody's ever done. You can't exit the system. It is like, it becomes like you go from a free person to having monopoly points on somebody's computer. It's even more than, I mean, the Fed system has become more like that, even, right? And whoever they don't like, they delete them, and whoever they like, they add them. And the whole CBDC basically makes all kinds of monkeying around with individual people's balances much easier to do, right? And that is what China's certainly doing, right? So anybody who's politically unfavorable to the regime, they freeze, they can seize, they can spy, they can do whatever, right? And who's politically favorable, they just direct deposit somebody else's money and nobody can see it, right? With all of these small banks, the tech banks, community banks going down, and all the money pinned at the central bank or at the big banks, the CBDC rollout becomes very simple. You just have 4 banks and they're really all the same, and now you don't have any choice. And the alternative to that, though, is if people buy Bitcoin, that is literally the exit from the system. It is something that they cannot control. They cannot edit the entries on that ledger. That's the whole point. It's this bulletproof, decentralized ledger. And the 21 million number, they can't corrupt it and they can't censor it. And this whole thing, everything that we've ever talked about here, you and me for 10 years. And what's funny is I am not, neither of us, I don't think, I'm not a Bitcoin maximalist, but we're all going to be Bitcoin maximalists now. Okay. What I mean by that is the Bitcoin maximalist philosophy. And again, I recognize that many of its exponents and so on are like insane, and it's all true. But unfortunately, you're going to kind of need insane people for what is about to happen. Okay. Their worldview is the closest. Most other people don't have any idea of what's coming. Okay. But Bitcoin maximalists are maybe the only people on earth who are prepared for the potential sovereign default of the US dollar and the rise of Bitcoin and the concept of hyper Bitcoinization, where the reserve currency switches over to BTC and all fiat around the world like basically collapses relative to the hardest money around, right? And basically what the US has done, what the Fed has done, is it's caused the fiat crisis. It's not really just a banking crisis, it's a fiat crisis. Because the crisis of having everything centralized in one place and them all screwing it up in the same way at the same time and lying to everybody.
Thank you guys for watching all the way to the end of today's clip. If you found any value in today's video, make sure to hit that like button. If you guys like our channel, subscribe. And also, if you want to get in on some exclusive content, you can become a member on our channel. If you click the join button right next to the subscribe button, you can sign up, and we have exclusive content, other perks for members of our channel. And thank you if you do decide to do that. And I'm out, guys. I'll see you in the next one. I'm Aaron from the Bitcoin Bros. Have a great rest of your day.